Shall we commence?
Let's do it.
Oh, well, thanks for having me, Josh. This is a fun thing for me to do. Hi, everyone. My name's John McCarthy. I'm based in Chicago and have been kind of a generalist investor for many years. And one of the fun things I started to do really around the pandemic was interview friends who are actually quite, good experts in certain things. And I kind of knew what questions to ask them. So I started writing them questions and just sharing them in my own, friend group. And then they were so good, I decided to make a website and just post the interviews up there. These are written things, not spoken things. And people, the feedback has been good because the quality of the answers are so good and the expertise really comes through. So check out the website. It's called 20goodquestions.com. You have to spell out 20 with a T. And feel free to sign up, leave your email. You'll just be notified when a new interview gets posted there. So I don't use it for any other commercial things. It's kind of scratches a journalistic itch, which is really fun. But that's kind of my background and just quickly, so how I got here. But Josh, you want to take a second and introduce yourself for a minute?
Yeah, absolutely. Hey, everyone. My name is Joshua Preston. I'm the CEO of Gannett Trust Company, which is just getting formed since about May of this year. Prior to Gannett Trust Company, I did some independent consulting in the financial services space, especially around risk management, product development, and focusing on fintech, Bitcoin, innovation, all that good stuff. Prior to that, I worked for a couple of years for Unchained, and then I worked before that at Square, which is now known as Block. Before that, where I started my journey in financial services, though, I was a regulator with the federal banking regulator agency called the OCC, and really cut my teeth in all things banking and financial services, especially around risk management. I started in 2009, which I'm sure you remember, John, very well. It was a very interesting time. It was a very interesting time to start in the area too, especially around financial services, to see not only what things went wrong and how risk was not managed, but also to see really the core good principles of what folks can do right in financial services and helping folks protect and manage their wealth. And I spent about 10 years there and learned a lot and had a lot of great mentors, especially community bankers who really cared about their community. And I took a lot from that. But John and I met a few weeks ago, actually a couple months now. We met in Chicago, which is where John's at, and I'm actually out in Nashville right now, but normally in Jackson, Wyoming.
Nice. And was Gannett Trust your idea?
I would love to take credit.
Yeah.
I would love to take credit for the entire idea, but it started out a few years ago. Back in 2021, actually before I started at Unchained, when I was talking with the co-founders of Unchained, Joe Kelly and Drew Bansal. And during my interview, Joe and Drew asked me, what do you think about a bank charter? Is that something that we'd ever consider going after? And I said, well, given my experience at helping folks or at looking at bank charter applications, that might not be the right direction for you. And in fact, taking a look at a trust charter might be the more appropriate way to go. And, that was back in 2021, and here we are 4 years later, and we've actually done the thing
Nice.
and started to open our doors.
Well, congratulations on your entrepreneurial initiative here. But can you tell us, what are the essential services that Gannett delivers, and what's the relationship with Unchained, or how do you collaborate with Unchained?
Yeah, that's two really good questions. So essentially the services are, and I think this is one of the common misconceptions about a trust company is, what does a trust company actually do? And it isn't, well understood broadly, I think, what trust companies do. And a lot of times there's a mix of, well, a bank does this and a trust company kind of does some of the other things. But basically, it boils down to being a fiduciary or a trustee for folks. And folks that come to trust companies, they generally need the services of a professional fiduciary. And a fiduciary is somebody whose sole responsibility is to look out for the best interests of that person, that individual, that family, that child or beneficiary, and ensure that the wishes of whoever created the trust are really brought to full completion. And so what we do is we ensure that we have a professional, a legal, and fiduciary responsibility to ensure that takes place. And so that's our bread and butter. We can also do things like custody assets, custody Bitcoin, custody fiat assets, help people manage their money. There's a lot of ancillary services, but it all boils down to being that sole fiduciary and responsible person and working together with a family. The second question you asked was around our relationship with Unchained, and we're an independent subsidiary. And I say independent because it's important for us to have that good relationship with Unchained, but also have our independent board of directors so that we can really uphold our fiduciary responsibilities to our clients.
Yeah. So you can be a corporate trustee in the traditional sense?
That's right. Yeah, we can be a corporate trustee in the traditional sense for businesses. We can also be a professional trustee for families and individuals.
Nice. And I guess I would consider you guys kind of a digital native. Is there an advantage to being a digital native as opposed to, Northern Trust getting into this business? Which I'm assuming Northern Trust will eventually get into this business.
They are already in this business, and it's interesting. Just as an aside on that note, John, there are a lot of traditional trust companies out there that are starting to dip their toes into this area, and I think that bleeding into that question that you asked about what's the advantage of being a Bitcoin native or a digital native trust company. We understand very deeply because of our history, because of our relationship with our parent company, Unchained, we understand very deeply the unique aspects of Bitcoin and what it takes to be a fiduciary in this asset class and to be a fiduciary and custodian in protecting that asset for future generations. And that experience is born out of a lot of trials and tribulations over the last 15 years. And not a lot of those, what I would say, traditional trust companies have that same level of experience. They have a lot of experience in a lot of other aspects, and that experience is very, very enlightening and powerful and useful in thinking about digital assets. But it's not the be all and end all. And so our digital native or Bitcoin native approach to these things really does help us in also understanding our clients' needs, our clients' worries, doubts, thoughts, and plans for the future.
Yeah. And Josh, I know you spent some time at the OCC. Who is your primary regulator, or do you have a number of regulators?
Yeah, we do have a primary regulator, and that is the state of Wyoming. We are chartered in the state of Wyoming. We're overseen by the Wyoming Division of Banking. There's actually quite a layered system of supervision for trust companies. It's almost analogous to how banks are regulated, in that a bank can be regulated by the state, but it can also be regulated by federal agencies like the Federal Deposit Insurance Corporation or the OCC, as you mentioned, John. There are some trust companies that are regulated by the Office of the Controller of the Currency, the OCC, and but there are fewer of those than the state-chartered traditional trust companies out there. And again, we are located in Wyoming, and that's our primary regulator.
Yeah. Sorry, I'm jumping around topics, but I've heard this term collaborative custody. I'm not sure what that is. What is collaborative custody?
Yeah, that's a great question, because it really is the foundation of what a lot of our of our affiliate company, Unchained, what they have started and what they've built over the last 7-8 years. And collaborative custody really boils down to, how do you protect Bitcoin? How do you secure it? And how do you control it? And we'll get a slightly technical, and I'm sure many of the folks tuning into this will appreciate that this is a very high level description of what collaborative custody is. But Bitcoin is commonly referred to as a digital bearer asset. And the way that you show control or ownership of a bearer asset is by having some sort of, usually it's a document. If you think of bearer shares, which there are still some out there, but it's really a bygone sort of instrument from decades ago. A bearer instrument showed ownership of that stock or whatever that ownership interest represented by having a document that said the bearer of this instrument actually owns the thing. And Bitcoin is very similar in that the person who owns the keys to that Bitcoin own the underlying thing. And so having custody of Bitcoin really goes back to who controls the private keys for an address that represents an ownership in Bitcoin. And there's lots of different ways that ownership can be configured. And in many instances, what we work with is what's called multi-signature. And that just means that you can have more than one private key that represents that ownership interest in Bitcoin. And you can configure that in lots of different ways. The most common one that we work with is a 2 of 3. So there are 3 private keys, again, representing ownership in that Bitcoin. And you can use any 2 of those keys to control or send or move that Bitcoin from one place to another. And the way that collaborative custody works is by taking those configurations, that 2 of 3, we can distribute those 3 keys to various individuals, institutions, and collaborate on protecting and securing that Bitcoin, that custody. So that's where we get to collaborative custody.
Interesting. So if I was a person that just sold a family business and I wanted to make you corporate trustee, I wanted to set up a trust, an intergenerational outlook here. And I said, hey, Josh, I'd like you to help me quarterback, if you will, build a diversified portfolio, but I'm very interested in digital assets. And over time, I would like to build some of those. I'm assuming you can help that person.
Yeah, absolutely. And the thing that we always start off with is, and this goes back to the role of being a fiduciary, is asking, what are your goals? Somebody who has that life-changing event, selling a business, having some sort of windfall, inheriting some money, there's a lot of decisions that they have to make. And having somebody that you can trust to talk to and to think through those goals is really worth its weight in gold or digital assets, digital gold of Bitcoin. And if somebody were to come to us and say, you know what, I would really like to be able to secure some of my wealth in Bitcoin or some digital form, we're going to help them think through that. We're going to help them think through not only how much would they like to allocate towards that position, but also, and this is key, and this goes back to that collaborative custody discussion that we just had, we need to think of how do we actually protect that Bitcoin and make sure that it's, it is not at risk of loss, it is not at risk of compromise or theft. And how can we do that in a way that minimizes the risk so that we can realize the full potential of, the potential gains in Bitcoin, the potential value that is there for generations.
Gotcha. And back to that concept of digital bearer for a second.
Sure.
If, I don't know, I'm just making up scenarios, but let's say a commercial real estate building was tokenized, and now there's 100 owners of that building. And I come to you and I just bought these tokens for my trust. I'm assuming you can handle that for me.
Yeah, and really that's no different from the way that you would look at a real estate investment trust and the ownership investments that are represented through shares in a REIT. Obviously, there's a little bit of a difference because one is a digital representation, and I would actually posit that the REIT example is also a digital representation. You're not actually owning shares in a REIT, physical paper certificate shares anymore. They're actually just representations of those shares that are most likely held at DTCC in New Jersey. And on the token side, especially with Bitcoin, you can actually take ownership of that. So you don't have to, say, for example, rely on DTCC to do the right things. And I'm not saying that they don't do the right things, but you can actually own physically, digitally, you can own those representations of value outright and control them. And I think that there are quite a few folks that really value the fact that you can control and own something like Bitcoin and not have to rely on some centralized counterparty to basically warrant or represent that you do have that ownership. And I do think that value is becoming and taking a lot more interest from more people around the world, especially in times where we have a lot of changing things. We've got a lot of turmoil in some regions of the world. And if you were tuning into our last panel talking about philanthropy and human rights, you probably heard a lot about why that's valuable for folks that are in some of these more tumultuous places.
Yeah. Do you see any movement currently toward using, say, blockchain technology in real estate for deeds or even like health records, medical records, those kind of things? Is that happening?
It is happening. There is a lot of discussion about how to use Bitcoin's underlying technology, which is the blockchain, on certain things like tokenizing real world assets or records or digital records. A lot of times I think people sort of conflate the underlying technology of Bitcoin with other applications that could be used. And one worry that I have sometimes is, we talk a lot about the promise of blockchain or something like that. And I oftentimes think that, maybe we're trying to find a solution for some sort of question that we have that's not really well defined. I think back early in my career, or actually it was later in my career at the OCC, when I was asked to look at Bitcoin and other digital assets. And one of the common narratives at that time around Ethereum was, Ethereum will eventually be the world computer. And it struck me as a little bit odd to think about applying this fundamental technology to solving all of the world's problems. And I don't think that that's the right way to think about this. I think I know that Bitcoin solves a very specific problem, which is the double spend problem. It also solves a problem around money, which is, it's easy to print money for governments to print money. And so having a fixed supply of something is a valuable thing. And if we start conflating a lot of that principle with other applications, which are valuable, but not really focusing on what Bitcoin is solving, we tend to, I think, miss the mark. And I'm not trying to belittle the fact that there's all sorts of great applications for blockchain, but it also it begs the question of, is this really the right way to solve that problem? or are we just kind of trying to find a solution for it, where really the thing that we ought to be talking about is how can Bitcoin store value and be a better savings device for us, for our children, for our future generations.
Yeah. If other companies in your industry, even like Northern, if they have an issue like hiring software engineers, for example, do you have like special problems in that area, or you don't need that level of talent? Or I'm not quite sure what I'm trying to ask, but I guess, are there unique technological challenges for you that maybe other trust companies don't have currently?
Yes, there are unique challenges. There are shared challenges among all trust companies and financial institutions, and a lot of those shared challenges around cybersecurity and protecting clients' information and making sure that you're not a honeypot for bad actors out there. That's a common challenge. One unique thing about what we're doing and why it's so important for us to really focus on that challenge, and also one of the benefits of collaborative custody, is we're not a single point of failure or attack. If someone were to, God forbid, come and try to extract somebody's private keys from Gannett Trust and steal someone's Bitcoin, it's nearly impossible to do that just by attacking Gannett Trust, because again, we use collaborative custody. So that means we've distributed private keys to other institutions, other professionals, other folks that also have different security approaches and different resource levels to be able to apply protections to protect all of that value. And so we benefit from almost like a 3x benefit of using collaborative custody over being a central counterparty, right? So if I think of, and I don't think this is generally limited to like a Northern Trust, but if I think of a centralized custodian or exchange or counterparty, they have to spend a lot of time, and not that we don't have to spend that time too, but they have to spend a lot of time hardening their systems and thinking about all of the ways that they can be attacked, where we think about that, but we also know and can sleep a little bit better at the end of the night that we're not going to be that single point of failure.
That's an interesting way to look at it. I guess I had not thought of that as kind of the central clearinghouse versus a collaborative kind of dissemination of that information. Like in central clearinghouse, if that were to go down, even like power outage or a cyber attack or something, as opposed to collaborative, which is more decentralized.
It's a really great point to double down on a little bit, because if you think about it, the internet as we know it for decades has been one of the most decentralized things out there. And there are sites that go down and some outages, but in general, it's a very resilient network. And if one node, one point, one server goes down, there's still connectivity. There's still ways to access. There's still ways to communicate. In the same way, collaborative custody helps create more robustness, more redundancy, and eliminates many of those counterparty risks or centralized risks that we can see in some spots in the traditional financial architecture, and not just financial architecture. I'm sure you remember, you travel a lot, John, and it was just a year ago that Delta had that big outage because of a software patch failure, and they were grounded for a year. Shoot, I remember in 2001, when we were still processing paper checks, all of those paper checks got stuck because they were being flown across the country to go to different places and get cleared at different Federal Reserve banks. All of those paper checks got stuck, and there was a big breakdown because we couldn't clear those checks. And so we had to move to a more robust, resilient process that eliminated some of those centralized risks.
Yeah. I'm going back to some areas that I forgot to ask you a question on. So putting your fiduciary hat back on for a second, if I say I'm the trustee for a family member, do I have any unique requirements or any unique skills I need to have around digital assets?
Yes, absolutely. I'm gonna hammer on it, but the custody arrangement is incredibly important, and this is one reason why we took the step to create a Bitcoin native trust company. You need to deeply understand how Bitcoin is custodied, how it's protected, how it's secured, all for those reasons that I mentioned, that you don't want to be that honeypot. You don't want to be that single risk, that point of failure, because as a fiduciary, you have to think about all of these risks that could potentially impact the value of whatever those assets are for future generations. You also need to think of how other assets play into the overall picture. We don't live in a bubble. We know that there are plenty of other financial instruments out there and other ways that families want to be able to, or individuals or even companies want to be able to save or plan or deploy the money, the value, their treasuries, what they've earned. And so how does that fit into your strategy when it comes to digital assets, when it comes to Bitcoin? Do you want to be able to have liquidity in the future? And I'll go back to one of the things that's nice about working with a company or working inside of a company like Unchained is, they do have a lending desk. So are there ways to responsibly access US dollar liquidity through your Bitcoin holdings? And can you do that in a fiduciarily, I don't think that's a word, but a responsible way?
By the prudent person rules.
There you go.
That was another question you just touched on, is do people use these assets as collateral?
Absolutely. And in fact, we've seen quite a bit of an uptick in the use of Bitcoin as collateral in all sorts of different financial transactions. One of the benefits of Bitcoin and the way that it works is that it is a 24/7 asset. And some folks may say, well, that might not be a benefit because that means on the weekends and in the evenings when I'm trying to have some downtime with my family, some things may be happening in the market that I need to be aware of. That might be a good reason to work with a fiduciary like Gannett or someone else. But there is a lot of depth and liquidity in this market, and many lenders, many market makers have started to look at how to incorporate Bitcoin as collateral in various different transactions.
Gotcha. Well, a couple of questions just on Bitcoin itself, which, a couple of years ago on television, I saw an analyst, and his main point was there's Bitcoin and then there's everything else. So he felt Bitcoin was, the clear leader. I guess he's been right so far, but
Yeah.
Is that the way you look at it? And what attributes make Bitcoin distinct?
It's a great question, and I think we could probably spend a couple of days on this one, John. I think just high level, a few points that I would make to those that are curious and looking at Bitcoin or trying to really understand, like, why wouldn't I want to investigate some other assets or some other digital assets that are out there. And a lot of folks have been through that journey, and they've investigated those other digital assets, and they tend to come to the realization that Bitcoin is really special and unique. And some of the reasons why it's unique is it is, in my opinion, the most decentralized of those digital assets, right? There is no CEO of Bitcoin. There's not somebody out there that says, Bitcoin will become the world computer, or Bitcoin will become a high-speed throughput replacement for Visa. That's not how Bitcoin works, and instead, it's almost what I like to think of as an organism of evolving, and other folks finding ways in which Bitcoin can be used in, I think about payments, for example, on the Lightning Network, how it is one of the most decentralized and quickest ways to make a payment. Does it have the same adoption as Visa and MasterCard? No. But back in 1950, not many people were pulling out a piece of plastic to pay for their dinner, right? It took half a century for that to come to play. So there's a lot of decentralization, I think, is a plus. There's it's based on the soundest cryptography out there, and many of the other assets digital assets have basically adopted the same cryptography that Bitcoin uses. And the other piece that I would say is that it benefits from is its limited supply. And it really comes down to the point that it's very hard. It would be very, very hard to change that limited supply. And that's not the case in many of these other digital assets. And that's really a lot of the reason why folks value it so highly. The last thing I will say, I know that the last one I said was the last one, but one of the other things is the linkage between Bitcoin and energy. And you've probably heard a lot of the discussion around Bitcoin and energy, and much of that discussion, especially when I was first looking at it from a regulatory aspect, was, is this a big waste of energy? And that I don't think that has bared out to be true. And in fact, there's a lot of really good research out there that shows the good of having an energy intensive asset like Bitcoin, that it brings to diversifying energy sources and finding ways to use stranded energy, or energy that's really, really cheap. There's lots of really great case studies out there that we can talk for days about, but it really is tied to energy. And I think if you've ever seen that chart about economies and populations, that their prosperity relative to their energy use, you'll see that the higher amount of energy that a population uses, that a society uses, generally the more prosperous they are. And you can see that over history too, right? England went through the Industrial Revolution and came out a very prosperous country because of their harnessing and use of energy from steam power and from coal and all those other things, to where we are today with looking at green and renewable energies and the plethora of other energy sources that we have out there. And I think that's a really unique aspect to what grounds and what ties Bitcoin into our reality.
Yeah. I mean, assuming, I think it's consensus that Bitcoin is the industry standard leader, most interest in it, could there be a better technology that comes along?
I would never say no to that.
I wouldn't expect you to.
Yeah, I'm probably too much of a pragmatist to not say no to that. The thing is, we've had Bitcoin now for good on 15 years, and there's been a lot of other technologies that have come and gone, and the thing that I would go back to about what I just chatted with about one of the benefits of Bitcoin and why it's such a special thing is its ability to evolve, its ability to like an organism does, to change and adapt to its environment. And that's one of the reasons why, if there were some good things that came along, it doesn't mean that I don't think that Bitcoin could evolve, or some other protocol or layer that uses Bitcoin as its foundation couldn't be built on top of it.
Yeah. Well, I'm like a mile wide and an inch deep, but I did hear, I'm by no means an expert in this, of course. I did hear a podcast not too long ago with a leading analyst who's a very experienced investor in a lot of different asset classes. And he had been a skeptic in this area for a long time. And he said, well, this is about a year or so ago. He goes, well, I've done a lot of homework on this and I've decided to get involved with Ethereum.
Mm-hmm.
And the main reason for that was he liked the ecosystem and the technology around Ethereum. Is that like a reasonable approach, or could he be right? Could it be wrong? Would you advocate, like, if you have some Bitcoin, you should also have some Ethereum, or that's more of an investment decision you don't want to make?
I think that's got to be a personal decision. I would certainly want to understand very deeply the fundamentals of what it is that I decide to invest in or purchase. As a fiduciary, we have to do that. I think reasonable people can come to different outcomes and conclusions, and we should welcome challenge. And there's plenty of skeptics that have bought Bitcoin. There's plenty of skeptics that have not. And I think that skepticism is healthy. And it challenges us to think very deeply about the assumptions that we've made, about the decisions that we have made based on those assumptions. And I think that it's okay for us to make a decision and then also in a couple of months or a couple of years to reevaluate that and say, was that the right decision? And be okay with saying, maybe it wasn't. Maybe it is a thing that I need to reevaluate. And that is a process. And I will tell you, I've been through this process for 10 years now. And I still feel very confident in my thesis as to why I would say Bitcoin only. But I'm sure I could find a couple of folks that would challenge that, and I'd welcome that. I don't think that it's I don't think it's a bad thing that folks go also through that process of learning. And I went through my own process of learning in certain different aspects in investing and in digital assets, and learn through doing and making some mistakes, and that's healthy. That's part of the joy of life too.
Awesome, love that. I have a few more questions. I think we have, I don't know, 10 more minutes or so. Yeah. But and if people want to post questions, I think there's a mechanism to do that. But most people probably on the call are one element of the due diligence business broadly defined. So what kind of due diligence should one do when looking for kind of a digital native trust company custodian?
That's a great question. The first thing is, do they understand the fundamentals of that digital asset? Do they understand how it works, how to custody it, how to protect it, how to own it, right? There are different mechanisms for owning Bitcoin and different mechanisms for owning other digital assets. And if you you should ask your fiduciary, your trust company, your custodian, how is that custodied? How are you protecting it? And if you don't get good answers, or you get delays, or sort of the dog and pony show, or the wizard behind the curtain sort of thing, I would suggest that you do a little bit more research and look at other competitors and trust companies out there. The second thing I would say is, ask other folks that you work with and who are in your life, your friends, your colleagues. Ask about their experiences. You can also look at track records. You can see how large custodians have performed over the years. Have they done a good job of working in the best interests of their clients? Or is there some other interest that they're working for? Is it a self-interest? Are they only working in their own profit motive. In my opinion, if we serve our clients well and we act as a fiduciary and we're a prudent person or a prudent company, we will benefit at the end just like our clients will. And those to me are the really big questions and diligence factors to go through.
Gotcha. How are institutions, I don't know, say an endowment, even like a small endowment? I think the big endowments are probably already involved, but how are the smaller institutions getting involved?
You'd be surprised on those big endowment things. I've seen a couple of times where, some large universities or funds or philanthropic ventures not understand how they may have a donor that comes to them and says, I would love to be able to donate Bitcoin. How can I do this? And a lot of times the folks will say, I don't know. And that you don't want to say that to a donor, right? A lot of these endowments, they definitely appreciate and want to be able to accept that gift, but they won't know how. And so we have seen a lot of evolution of these what I would say are foundations, just generally, where they start by just converting that digital asset. They find an exchange, they find someone to convert that digital asset into US dollars or some other local currency. And what we have started to see in this evolution is that many of these foundations, because of the underlying fundamentals of Bitcoin and the realization of the value that it brings, that they're now, instead of automatically just converting it into US dollars, they're continuing to hold it in its original form. And so they see like, somebody decides that they're going to give me Bitcoin, and maybe this was 4 years ago. Now all of a sudden, if they didn't convert that Bitcoin, they can see a lot more value in what that donation was. Similar to, if somebody were to donate a stock or a bond to an endowment, if you can keep it in its original and you have a good fundamental understanding of the value behind that, it can really create value in the future by not just converting it to a depreciating asset like a US dollar.
Awesome. Well, last question, I guess, would be, I was talking to a registered investment advisor not too long ago, and I said, what do you do, when a client wants to get involved? And they're like, we tell them to go elsewhere. And I was like, that's not going to work that's not a great idea. And she agreed. But how do you collaborate with other, advisors, tax advisors, attorneys, other custodians, other investment advisors that a client might have?
I know they're trust companies. You're probably not surprised by this, John, but some folks may be surprised about how many conversations that I have had. I'm surprised by it with banks and trust companies that, just like the registered investment advisor you talk to, they don't want to send their client to someone else. They really want to. If somebody walks through the door, they want to continue to maintain that relationship. It's one thing that I learned when I was working with community bankers in the beginning of my career in financial services, is that relationship is the lifeline of what we do in this industry. It's all about relationships, and it's a personal relationship. And if I end up sending somebody to, someone I don't know or whoever, I'm not ensuring that relationship is maintained and cared for and nurtured. And what we want to do, and this is a big thing that we do a lot of, is the educational aspect. And through education, you become, a source of trust, and that trusted advisor, that trusted navigator, that pathfinder for folks. If we can help other institutions serve their clients better, that's good for us too. because we can help this entire industry really grow and flourish to what its potential can be. And by showing registered investment advisors, showing banks, other trust companies, attorneys, tax planners, that you can do this and we can help you, I get a lot of joy out of that at the end of the day, and I hope our clients do too.
Yeah, no, that would be super valuable for a lot of clients. But well, are there any questions just today that we did not cover that you would like to cover very quickly? Or
John, how much Bitcoin do you own?
we do own some, yes.
All right. I like to hear that. Do you own it outright, or do you own it, say, through another vehicle?
Through another vehicle.
Okay.
Yeah.
All right.
We're struggling with these. How do we do more? And I suppose if Bitcoin were to drop, we'd get more interested. Not less interested, but probably more interested. So we are kind of price sensitive, I guess. But
sure. Do you think, given your experience, over many years, do you think there's a point at which that might change, where that price sensitivity, or that I'll wait until it crashes 20% or something like that, and then I'll make an entry? Do you think there's a point at which that changes? Have you seen that with other assets?
Personally, I don't see that changing. I mean, investing to me is about cash flows and their form and dependability. Obviously, there's no yield with Bitcoin, so it's a little tougher to value, like on a cap rate, like you could a piece of real estate or something. But I mean, so like, what do you want to pay for those cash flows? And I don't think there's anything wrong with being price sensitive about it. But
I don't think so either.
But I'm an inveterate stock picker at heart, so take that for what it's worth. But well, good. Well, I will, with your permission, I will get back to you in the coming weeks, and I'll get these questions to you and other questions, and you can take your time and answer them thoughtfully. And then with your permission, I'll put them up on the website, and everybody here can go check it out.
Yeah, we'd love for everybody to be able to check out not only these 20 good questions, but some of the other 20 good questions, which are really good. I will
check them out.
I will have to mention that.
Thanks. Yeah, it's fun to do.
Thank you so much, John, for your time today. It's been a real pleasure.
Thank you for having me. It's been a lot of fun.